and I will officially welcome everyone tonight to our club leadership webinar on incorporation and tax exemption for bike clubs. It's a topic I did not know much about when I started at the league a little over a year ago. It's a topic I've had to learn a lot about because people do have a lot of in-depth questions. It's an important topic for bike clubs. And in learning about it, I was putting together a resource that's available on our website, in which I will probably be revising after this presentation as I learn even more about it. But as I was looking for resources on tax exemption, on incorporation for bike clubs, I stumbled on the website of a law firm called Thompson & Thompson, which is based in Livonia, Michigan, although the firm works nationwide with nonprofits and specifically sports clubs, and found it to be a really, really great resource for these issues. And so I'm very fortunate that Jerry Thompson of Thompson & Thompson agreed to be with us tonight and to present to us about this topic. I hope he'll be able to answer all your questions, and I hope all of mine. Okay, Jerry, thank you so much for being here. You should have the option to turn your screen on and show us your screen here in just a moment, and go ahead and take it away.
Okay, great. Thanks, Scott. It's good to be with you this evening. We've been representing nonprofit organizations for about 20 years, and since much of the work we do is federal in nature, dealing with the IRS, it makes it easy for us to handle these kinds of matters in any state because incorporating in various states is a fairly perfunctory matter for the most part. The IRS basically handles all the tax exemption applications through a single filing system. You never actually know where the application is going to land, and within the IRS they have several field offices they ship them to in a random order. So just because you're on one side of the country doesn't mean you're going to be dealing with the IRS that's close to you. It could be on the other side of the country or whatever. But they do at least have uniform rules they have to abide by. And in fact, athletic and sports clubs are not that big of an issue for them. So it's a fairly easy matter to handle. Have kind of three parts to the presentation. We can take questions at the end of each of the three parts. The first part just deals with what it is to be a nonprofit organization, specifically a nonprofit corporation. And then we'll deal with 501c3 and 501c7 status separately as separate topics. Essentially, the difference between nonprofit and tax exemption is a difference between state and federal law. Nonprofit simply means an organization that nobody owns. It doesn't mean that you can't earn a profit. Doesn't mean that you have to take a loss, that your revenues have to be less than your expenses or anything like that. What it means is that the individuals who control the organization and who participate in the organization can't take the profit out. So there's no equity in a nonprofit organization. And in fact, in most states, a nonprofit is equivalent to a non-stock organization. I've got some information on our website. The first one I have here is FAQs on the nonprofit corporations. Just some general background here in terms of what it means to be nonprofit. And again, trying to reinforce the idea that a nonprofit is a state law or a state corporation law concept. It is basically something that says nobody owns this entity. Doesn't mean it's publicly owned. It really means that there are no owners and no private persons or individuals or businesses are going to draw the profits out of the organization, that if there are profits, they're simply going to be retained. And in fact, great many athletic clubs are huge enterprises. I mean, it's not that unusual for an athletic or a sports club to take in $500,000 a year, depending on the sport, depending on the area that it's located in, etc. But there is, in fact, no limitation numerically or monetarily on how much money a sports club can take in. Such a limit does not exist. If you see here, there's a distinction made between directorship corporation and membership corporation. The only difference there relates to simply who elects the board of directors. The vast majority of all athletic or sports clubs have members, but they don't necessarily vote. And if you have the members vote for the controlling board, then that is a membership corporation. If you have the board select its own members, apart from the general membership of the organization, then that's a so-called directorship corporation. And whether the state makes that distinction in its articles of incorporation will depend on what state you're located in. Some do, some don't. But even if your state doesn't recognize that distinction, you still have to define at some point how the directors are elected, because every state will have ultimate responsibility for the organization falling on the shoulders of somebody, and that somebody will be the board of directors. It can be called board of trustees or whatever, but there will be a board. It will be the one that, whatever state you're located in, the corporation law will look to as being the people in charge, the people ultimately liable for decisions. And so, that's sort of where the buck stops in any kind of nonprofit organization, is with the board. And so you have to define, how does that board perpetuate itself? People come and go. How do you replace people that leave? How do you get rid of people if you have to? How do you add people if you need to? What are the criteria or qualifications for serving on the board? All those kinds of things have to be thought of at basic level. But those are all state law concerns. The IRS is not too terribly concerned with those things. The only way the IRS is going to come in is to simply say that we don't want all those people to be related by blood or marriage. And if anybody gets paid, then we don't want people essentially controlling their own compensation. We want enough people on the board to be disinterested in any one person's pay, so that essentially that person would abstain from voting on their own pay, and all the disinterested people would have to approve it. And that's the extent to which the IRS ever gets involved in the question of who sits on a board. Beyond that, they don't care. There's not a whole lot of liability that comes from being on the board, but you might want to consider getting what is called a D&O policy, which is a directors and officers insurance. It's a fairly standard item if you talk to an insurance agent to protect any of the officers or directors from any personal liability. It only covers really exceptional things, because the general rule is they're not going to be personally responsible. Most state corporation laws provide that liability is really limited to gross misdeeds. In other words, the board has to do clearly something illegal, something that it knew was inappropriate at the time. They have to make a distribution of money that they knew was wrong before any liability attaches. I mean, if a biker gets hurt, riding in a sponsored event, that is not the kind of thing that's going to give rise to any personal liability to the board members or the officers. You should have, general liability insurance for that kind of thing. If a claim was made against the club, it could take all the assets of the club, but it's not going to hold any of the individuals responsible and attack any of the assets of the control people. So it's minimal exposure, but still somebody's got to be in charge. The law has to place the burden somewhere, and that's how it's done. So that's basically it on nonprofit corporations. Scott asked me what the difference is between a corporation and an association and when you decide to incorporate. The big difference is, and we have an article on our website on volunteer sports club liability. It's a helpful article. It kind of goes into a little bit, it's a little bit longer article that explains there's another type of organization you can have, which is an unincorporated association. Unincorporated association you can think of like a partnership that nobody owns. But in a partnership, all the partners are equally liable for the debts of the business, and at least there you have ownership. In a unincorporated association, you still have nobody owning the organization, but now everybody is liable. And if in that event, if you had a biker get injured in some sponsored event, they bring a claim against the club. The club either doesn't have insurance or the insurance is inadequate. Then the claim can be processed further against all the members individually. And that's the main reason why you incorporate. You incorporate as a liability limiting device. And whatever exposure the directors and officers have is a lot less in a corporation than if you didn't have a corporation, because everybody's totally exposed if you just have an unincorporated association. So we never recommend anybody to have an unincorporated association where injury is a possibility. There's absolutely no benefit. The cost of incorporation by itself is something that can easily be done for under $1,000. Why fool around? It's something that you ought to do. There isn't any good reason not to incorporate, as far as I know. Yes, there's an administrative burden, but that's the price you pay for peace of mind and the protection of the liability. So you have to hold minutes every year for annual meetings, and you have to keep those in a book. Big deal. You've got to have written bylaws. And we can give you templates for bylaws. That's, again, no big deal. That it's just, you're just talking paperwork. And it's just having the paperwork is, if that's all it takes to protect everybody's personal assets, then that's a pretty easy decision to make. Okay, so that kind of covers an unincorporated association and when you should incorporate. Before we start talking about tax exemption specifically, are there any questions on incorporation or nonprofit status generally?
I am looking to see. I do have a hand up. Before I recognize the questioner, I just mentioned that the League does offer insurance, both directors and officers, as well as liability insurance. It's a member benefit for member clubs. You have access to our insurance policy, and we do as I am sure most of the people know here, offer those kinds of coverages, and in fact will cover regardless of whether the club is incorporated or not. Roy Jones, are you there? Do you have a question for us? Roy? Roy Jones? Okay, maybe next time if you have a question you can type it in. Roy, it says you have a question. Can you speak to us? You're unmuted. Okay, how about type it in for us? Jerry, why don't you go ahead and continue, and we'll come back to that.
Okay, sure. As far as the IRS is concerned now, the mere fact that you incorporate as a nonprofit corporation in some state does not make you tax exempt. That is a separate determination by a separate government agency, and there is absolutely no coordination whatsoever between the IRS and the various secretaries of state of the states, or the corporation bureaus, or whatever department of the corporations is involved at the state level. So none of that information gets transmitted to the IRS automatically. Exemptions are not automatic. You have to apply for them, and there's a process depending on whether you choose to go 501c3 or 501c7. Those go on two separate applications. One's a Form 1023, the other's a Form 1024, and those have to be approved by the IRS, specifically the C3 status. If you don't have a letter from the IRS saying you are exempt, you are not exempt. And it used to be that you could be exempt, and under the threshold for filing annual reports, which is a Form 990, that requirement has been changed, and so now everybody has to file an annual 990, no matter how small, no matter if that kind of organization used to be exempt. The IRS basically wants to know you're still alive, you're still around, that you're still claiming exemption. Because there were too many organizations that were out there claiming exemption that weren't filing, and the IRS couldn't even verify that they still existed, had no way of knowing. So those rules have changed, and so every exempt organization now must file annually a Form 990 in order to maintain its exemption. So yes, there will be an ongoing accounting cost of some kind, whether you hire an outside accountant or not. You'll have to have somebody with the capability of preparing and filing that form every year. Generally speaking, most states do not have any state equivalent. It's just the federal form, but the states will have a corporate form, not a tax form, but a corporate form. They may call it an annual information update or annual report or something else like that. But the purpose of that form is simply to declare who the officers and directors are. It will not report any revenues or expenses. All of the monetary information gets filed strictly at the federal level. So you have your choice of going either the C3 or the C7 route at the federal level. And one of the questions is, obviously, how do you choose between them? We can look at these in detail, but essentially the C3 is a charity. You have to have a public focus. A C7 is a social club. It has an inward membership focus, and we'll look at those separately. let me take you to a page here on our website that basically explains whether you can or how you can qualify for 501c3 status in the first place. The vast majority of people given the option prefer 501c3 status simply because it's more flexible. It gives you greater sources of revenues, and it gives you the ability to attract sponsors. That's a better attraction than a C7. And the donors for the public also have the ability to take a tax deduction for any donations. You know, the C7, by contrast, will have a more limited form of revenue acceptable streams. It will be less attractive for sponsors, and it will not offer any donors a deduction for their donations. And so the C3 is typically the one that people prefer to go for if they can. And you see in the middle of the page here, how does an amateur sports club qualify as a 501c3 charity? You don't actually have to do anything that you normally consider to be charitable. Charitable for IRS purposes is very broadly defined to be whatever we say it is. And whatever that is, whatever the IRS or Congress has said it is. And what they have said is that there are two ways that a sports club can qualify as being charitable. So you don't have to do canned food drives. You don't have to add anything to the sports activity. You just engage in the sports activity one of two ways. Either you sponsor or participate in national or international amateur sports competitions, okay, which basically is the only way you can do the club with adult members, okay? If you have adult members, you've got to do something that says we're recognized by some national or international sanctioning body. We don't necessarily have to win tournaments. We don't necessarily have to travel to any place in particular. We simply participate in sanctioned events that lead to states, that lead to regionals, that lead to nationals, that lead to whatever, okay? And so you're participating in the overall sanctioned scheme of events or competitions. Obviously, the athletes have to be non-paid in order for this to happen. So your paid athletes, that's out. But this is one way to qualify for 501c3 status. This is considered a charitable activity just the way I've laid it out here. And the other way is if you have members that are under the age of 18, then it's a little bit easier test. You don't have to participate in any of those sanctioned events. You can actually be quite independent so long as you're directed to youth under the age of 18 and encourage growth of the sport, which, you know, daggone every sports club in America is going to qualify for as long as the members are 18 or are under the age of 18. So it's pretty easy with a youth club of any kind to qualify for 501c3 status. That's why I say the IRS does not have a lot of problem with this. This is a fairly straightforward, charitable, recognized 501c3 type of exempt purpose and activity, and they take these clubs and they make them tax exempt every day. There are thousands and thousands and thousands of them across the United States. Now I have some more detailed information on this other page on our website, the FAQs for 501c3 status. It gives you some detailed breakdown of generally how the IRS goes about defining the word charitable. But I've already told you what it means for an athletic or sports club, and that's going to hold true. They want you to be organized and operated exclusively for these purposes. What does that mean? It means that the paperwork has to line up a certain way, has to say certain things. We know what those things are. We make sure they get in there every time. You have to be actually operated within those guidelines, and if you operate outside of those guidelines, then you run the risk of taxability or something else. See if I can scroll down here. Don't have to worry about private foundation status too much. You can see there that the restrictions on anything of a political nature. A 501c3 organization can engage in very limited lobbying purposes, generally under 5% of expenditures. You can apply for a special recognition to engage in lobbying of a higher amount, but you have to decide whether that's, if you do that, you obviously have to monitor it very closely. You have to adhere to the percentage and numerical guidelines strictly. All that stuff gets reported on a Form 990, so you're talking, if you're going to engage in any lobbying at all, you're going to have somebody employed on a regular basis to monitor that, to make sure you don't exceed your limits. And so that's got to be a fairly strong commitment administratively, because it can get out of hand fairly quickly. There's an absolute bar or prohibition on any political campaign activity. The difference between lobbying and campaigning is that campaigning means candidates, lobbying means issues. So if you want to raise awareness for bike safety and public awareness of bikers' rights and how much space that they are entitled to on the highway and blah, 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 that's a lobbying question. That's an issue. You can do that, and if you don't spend any money doing it, then so much the better. If people just do it voluntarily, and you avoid the application of financial resources, then you can do that kind of thing safely in a 501c3. But you stay away from candidates completely. Don't push your people because they support bike safety. Support bike safety regardless of the candidates. If you start talking about candidates, you'll always get into trouble. It's an absolute prohibition. Just stay away from it. And then there's unrelated business activities. I said that the 501c3 has a fairly broad range of income stream capabilities, so that you can have donations from the public, you can have membership dues, you can have fees that are essentially pay to play or pay to participate. You can have raffles. If you comply with your state laws regarding raffles, that's always a special case that you have to comply with state law. But you can do a variety of things. You can sell T-shirts. You can do, a variety of things. You can have caps or whatever, and you can have quite a different number of revenue streams coming into the organization that are all legitimate. You just want to make sure that they're not taxable. And so there has to be a rationale for each one of these things that comes from a sale. In other words, a T-shirt or a cap. If you're selling something, you don't ever have to excuse donations or contributions. But if you're selling something, you need to have a rationale. How does this promote our core purpose? In other words, how does this promote the athletic nature of the club? And by that I do not mean, oh, we're going to take the money from the T-shirts and use it for a road trip or a competition. That's not what we're looking for. It's not how you spend the money. It's how you raise the money that has to be explained. So you get money from selling the T-shirt. How is the T-shirt helping the club? Not the money from the T-shirt, but the T-shirt itself. How is the cap itself helping the club? And so you have to make an argument that the cap raises public awareness, that it is something that makes your members recognize as they're riding through the streets, so it provides safety, or you have to explain the merchandise itself, apart from the money that's raised, as actually serving some purpose that goes along with your exempt nature. As long as you can do that, you can do just about anything. It's the rationale that counts. And obviously you have to abide by the general rule. Don't operate this thing like a full-time business that does nothing but sells caps and T-shirts all year long, and you just want to keep those things in check. But at least it's an option, whereas in a 501c7, for example, it is not an option. And so you've got to take that into account. One thing that you want to keep aware of, this comes up frequently with sports clubs. I don't know if it relates to your particular group of clubs or not. If you ever do annual events where you sell programs, or you have programs and you sell space on the programs for local businesses to sponsor the printing of the program or to sponsor the event, there's a right way and a wrong way to do it. If it's considered advertising, it's the wrong way. It's taxable, and it's potentially harmful to the club. But there's a way to do it as a sponsorship, not as advertising. And I'm not going to go into all the great details right here, distinguishing advertising from sponsorships. I just want to make you aware that you can do sponsorships. You'd have to do them in a particular way that is sensitive to the fact that you don't promote people the way an advertisement would. And as long as you do that, as long as you stay within those guidelines, you can sell sponsorships, and you can bring that money in. And again, that's something that a 501c7 cannot do. Okay, any questions on 501c3 before we move to 501c7?
I do have a couple of questions that people have typed in, and if people want to ask a question out loud, they can raise their hands while we're going through these. One, going back to the incorporation question, one of the clubs on the call is incorporated, but they refer to themselves as an association. Is that just sloppy usage in terms of the distinction you were making, or is there any particular meaning to their calling themselves an association?
No, it's common for nonprofit organizations to use the word association in their name, so long as they're not an unincorporated association. If they are in fact a incorporated association, that's perfectly fine. There's nothing wrong with the use of the word. It doesn't detract from the existence of the corporation in any way.
Okay. Just a point here, Alan Forkosh of Grizzly Peak Cyclists comes to a lot of these, points out that if you're a small nonprofit filing the 990, you can use a simple electronic postcard that can take only a few minutes to fill out, and that's with annual revenues under 50,000, I believe. Is that correct?
Yeah, there's a very abbreviated form for smaller organizations, but it used to be that those organizations were exempt from filing anything at all, and so now, yeah, they've got, all different levels of Form 990. There's about 6 different variations of 990, and so you pick the one that's appropriate to your size and revenues, but you have to file something just to let the IRS know you're out there still claiming the exemption.
Okay. Here's another question. Our nonprofit is involved in lobbying our state legislature, but is a 501c3, limiting their lobbying to 20% of income. They're interested in increasing the amount of lobbying expenditures, and they're curious how to approach that. Would another tax status ask a switch to 501c7? I believe that, at least outside of bike clubs, organizations often have 501c4s for those purposes, if I'm not mistaken.
Yeah, right. That's the obvious answer. If you want to lobby heavily, form a 501c4.
And so they would have both statuses, a C3, and then you often see organizations add sort of foundation or education fund to the end of their name for the lobbying organization, and then contributions to the 501c4 lobbying organization are then not tax deductible for the donors. Is that correct?
Contributions to a C4 are not deductible. That is correct. Yeah, typically the education fund or foundation or whatever, that designates which one is the C3.
Oh, okay. I got it backwards.
That typically tells you which one is the charity. But yeah, the names can be misleading, but what you're really doing is you're setting up, you don't have dual exempt status, you have 2 separate organizations that separately incorporate and separately apply for separate exempt status. And you simply have them both coexist, and the trick there is not to commingle them operationally. So they've got to maintain separate bank accounts, separate records, separate payrolls. It's best if they have separate office space. They might be able to share a suite, but you would divide it physically in some way that, that this part is the C3, this part is the C4, these people are the C3 employees, these people are the C4 employees. But yeah, that's how you do it. You do it with multiple corporations. That's how the big boys play, and that's how it's done.
And can they share a board of directors, the 2 organizations, the C3 and the C4?
Bad idea. They can have some overlap, but 100% overlap, stay away from that, absolutely. Same thing with officers. You better have, no more than a 20% overlap at either of those levels.
So that's a pretty serious commitment, it sounds like.
Oh yeah, I mean, if you're running a lot of money through and you've got a big budget, you're running $500,000 or $1 million through your club every year, then yeah, you can afford to do that kind of thing, and many people do. You're not going to do that with a $50,000 or $100,000 club, because the administrative cost is going to be too high. And the vast majority of sports clubs in America don't have paid staff. But if you rise to the level where you do have paid staff and you've got those kind of dollars flowing through, then yeah, it may make sense.
So, and I guess the other thing to consider, and I don't know any of the details of the case, is just reorganizing as a C4. But that would depend what the non-lobbying activities are.
Or you would add the C4, because the C4 would not cover a sports club. The C4 would simply be the lobbying arm, and it would be solely for lobbying. It would, you wouldn't have a sports club operating out of a C4.
Okay.
The sports club is either going to be a C3 or a C7, and the C4 is going to be solely for lobbying.
Okay. Good. So another question here. Joe Stafford of the Bicycle Access Council has asked how a bike trail organization authorized by county government organize to accept donations that are tax deductible. If you're getting tax deductible donations, if I'm not mistaken, you must be a C3. That's the only way to have tax deductible donations for donors. Is that correct?
Well, that's correct, but the authorization from a county or state unit of government doesn't cut it with the IRS. Every state is also going to have what they call a charitable solicitation law, which basically regulates certain types of fundraising by 501c3 organizations. And they may be granted an exemption or special status under that state law, but that's not going to substitute for filing for an application for tax exempt status with the IRS, because if you don't have the IRS letter in your hand that says, we recognize you as a 501c3 organization, you aren't. And there is no state government that can give that to you. It must come from the IRS only.
Okay. Let's see. Questions. I guess just sort of a clarifying question. You're always speaking in terms of sports club, but a bike club is a sports club, correct?
Athletic club, sports club, yeah, they're all the same. It doesn't matter what it is.
So anything you describe as a sports club is going to apply to bike clubs.
Yeah, baseball, figure skating, soccer, bicycling, any of that's all the same thing to the IRS.
Okay, one question here, going back to your talking about the sponsorship versus advertising issue, and I guess commonly what clubs will do is put a company logo on a T-shirt for a ride, include a coupon or a company brochure in a ride packet. Can all these be presented in a way that's considered a sponsorship?
Well, there's a way to do it, but basically, if you simply sell a space for a sponsor to display their name, whether it's in a program or on a T-shirt, and that includes a phone number or a web address, that kind of thing, that's okay, that's no big deal. If you start including information about, well, we make these products available and we perform these services and come to us for this need and for that need, and our rates are competitive and we charge such and such, and we recommend that you use our sponsor because they're good guys. All of that crosses the line into advertising. And so you've got to be very careful there by including brochures in the packet, that if there's any kind of recommendation, price comparison, descriptions of products or services, any of that kind of stuff, that will constitute advertising.
Okay.
But that's a quickie. Like I said, there's a lot of detail in that thing, and there could be a whole separate seminar just dealing on that distinction.
Seems to me you can learn a lot just by listening to your local NPR station. They seem to be always running the very delicate line of what constitutes sponsorship and what constitutes advertising on the sponsorship of all their programs.
It's quite possible.
Okay. Let's see. I have a hand up. Alan, are you there?
Yes, I am. One question about 501c3 for at least many of the bike clubs that I'm aware of and that I'm a member of are non-competitive. So and they're composed primarily of adults, which strikes me that would sort of disqualify them for C3 status. Would that be correct?
Pretty much. It's not that they necessarily have to be competitive per se, but that they have to participate under the umbrella of some sanctioning body that governs competitions. If there's a way to do that, I used to do swimming. We always called everything a meet as opposed to a game or something. I don't know, what do you call a bike event?
Well, for example, most of the bike events that at the level I participate in are basically usually have the disclaimer they are not a race. For one thing, to get their insurance, century rides and such. Of course, there are also bike races, criterions. There's the USCF, National Cycling Organization, which is affiliated of the Olympics and everything. So, that's sort of a different branch. And some clubs do everything. Some clubs, have a little on both sides, and some clubs are very distinctive on one side or the other.
Yeah, if it's an all-adult club or primarily an adult club, and they're not, competing in events sanctioned by a recognized body, and they're not participating in races, then they might have a tough time getting 501c3 status.
Okay, here's another hand up, and it was a guy I was just looking for because I was going to call him out if I didn't see his hand up. Ron Pewitt from the Kansas City Bicycle Club has presented at some of these, and I believe they're applying for 501c3 right now, presenting an educational charitable purpose. Ron, is that why you had your hand up?
That's correct. My interpretation was that we would be shooting for the education as the exempt purpose for which we were going to apply for the 501c3 status.
That's going to be a tough sell because certainly educational purpose for 501c3 is broader than a formal school, but even in a non-school context, education is going to require curriculum. It's going to require, if not teachers, it's going to require presenters, and you're going to have curriculum writers. Where is the curriculum coming from? And then you're going to have to say, what is it that you're going to educate the public about, and how will you know that they've been educated? And so that's going to be a documentary question that you're going to have to show them a whole lot of stuff to demonstrate an educational purpose. That's going to be a very tough sell.
Okay. Go ahead, Ron.
Well, yeah, and I guess I'll reflect back to the prior individual's comment is that our insurance prohibits us from having races. I mean, that's I think that's where the source of that comment came from, where we can't have members competing against other members. The only caveat we have is we can compete against a clock. In other words, everyone can try to do their personal best time, which would include like the brevets or some other event where it is a competition of sorts, but you're not competing against other members. Time trials would be another example of what the insurance company would tolerate. But
so your club is not limited to people under 18?
Correct.
Well,
Our demographics are, you usually get the younger folks up at 20 until they start having marriages and kids, and then we don't see them until they're 40 or 45, and then there's a big, bubble there of people that the kids are empty nesters, and so you get kind of an age group that's early 20s and then over 40.
Well, you only have what you can work with, which is primary tests for 501c3 status. Now, the basic limitation is coming from your insurance, but of course all you have to do is go to your agent and say, well, we want different insurance that allows us to race.
It's actually not so simple as that. I think they're referring to the club insurance that you can get through the League of American Bicyclists, which is an inexpensive option, I believe, and a lot of clubs take advantage of it and find it a major benefit of membership, but it specifically excludes racing. I suppose if you wanted to have a racing event, you could get that event covered by another insurance agent. We wouldn't cover it through the league. That's part of how we keep the rates down, that it's more recreational than competitive riding. But I think also, if I understand correctly from what you were saying before, Jerry, the club need not sponsor these events, but only that they have members who are in some way preparing to participate in these events by their participation in club events. Is that...
Well, the club has to have the purpose of providing the opportunity for the members to do that. You're not going to say that our club doesn't engage in competitions, but we're preparing our members to participate in competitions sponsored by other clubs. And that's not going to get you 501c3 status. So you may be caught, but in that case, then you go for 501c7 status. But if you can get the C3 status with the educational purpose, fine. Look, I've seen a lot of weird stuff, and the IRS has a lot of agents that are inexperienced, and not all of them know what they're doing, and it's always possible to get something through that you never expect to get through. And once you do, they don't go back and revisit it hardly ever, so you don't have to worry about it. If they agree to it, then fine. If they don't agree to it, they'll let you know, and they'll tell you what they think you should do. And they may say, we think you should go 501c7. They may say, we think you should go 501c4, but I would never apply for C4 status initially. I would only wait for the IRS to offer that, and the only reason for doing that is because you have a broader income stream availability than you do if you're a 501c7. But certainly 501c7 status is very easy to obtain. It's so restrictive and it's so limited that it's therefore disadvantageous. The IRS has no reason not to grant it.
Yeah, I think
everybody that applies for C7 status gets it.
Yeah, I think that most of our clubs have a annual bike ride as a fundraiser that would blow that 35% of gross receipts test for members.
No, I understand, and that's one of the limitations on a C7 status. But there's trade-offs to everything, and we often say that there isn't anything you can't do as a 501c3 if it's postured correctly. And sometimes it's just a question of knowing how to, posture something so that the IRS will accept it. But, you have to realize that ultimately you actually also have to operate in real life in the same way that you say you're going to do on paper. You can't have two realities, one which is on paper, the other one which is real life, and have those be completely opposite. That'll catch up with you at some point.
No, I think that from our perspective, the League of American Bicyclists have a certified lead instructor training course. They have several courses that you can take. So I think what we had in mind was that these league certified instructors, the number that we had, the number that we gain each year, the classes that they hold, teaching locally to schools and such, would be where we would look to fall under that education exempt purpose.
And we do supply curriculum for a number of bike safety courses, so at least that saves you some money on curriculum writers.
Right.
Yeah, it's not like you cannot do it. It's just you've got a heavy documentation burden to carry with the IRS to demonstrate to them the educational purpose of the organization. It's a lot, you're just going to have to throw a lot more paper at them than you would to simply show an athletic purpose.
I have another question here. I'm going to go ahead and turn you off for a second, Ron, and move over to another questioner who I know has tried to approach some of these issues from a different direction by setting up a 501c3 to help operate an event ride. I think that's still in process, but Jay Marowitz, are you there?
Did you call me? This is Jay.
Yeah, you're on.
Oh,
we can
okay.
hear you. Go ahead and present your situation.
Okay, you got muted there for a second. Hi, I'm Jay Marowitz with the Mars Area Freewheelers in New Jersey. We have a bike club which is a 501c7. We wanted to run an event ride whose proceeds would be donated to ambulance squads or local ambulance squads. They've been helping us quite a bit through the years, and I think every bike club considers them their friends. We applied for 501c3. We're getting a little pushback. We formed a foundation that is going to be the 501c3. We're taking great pains to show clear separation. There is some mix of the boards, but it's not 100%. There's an issue that is a question that I have in general. If you are collecting money, raising money for another 501c3, but you are not, and so with a charity, you are just collecting the money for it. You are not doing the work of the ambulance squad, for example. Does that preclude you from becoming a 501c3?
No. Essentially, that makes you a foundation. I mean, a foundation is essentially a raise money and make grants type of organization where it has no program activities of its own that it actually, or if you think of it in terms of operations, it has no actual operations. All it does is accept grant applications and dole out money. That's what a foundation is, and those are all 501c3s.
Okay.
You can do that, but then, of course, what you're doing is you no longer have a athletic purpose if you're primarily helping these other organizations that have C3 purpose. Then you're going to have to recast your purpose in terms of what they do, and not in terms of how the money is going to be raised. the raising of the money simply becomes a vehicle for accomplishing a different purpose. The annual event is not actually the purpose of the organization itself.
Right.
And so there's probably some confusion there in terms of the IRS pushback as to which one's the tail and which one's the dog and which one's wagging the other, if I was to guess.
Okay. I think that describes what's happening to us. George Connolly, who's also in the club, who's right in the middle of this, may be on. He may have a follow-up question. And if he is, maybe he could raise his hand.
George, I see you. I just unmuted you. If you have a mic and a follow-up question, talk to us now. You there, George? Okay, perhaps not. If you get to us and want to speak, then we can certainly do that. I have a few more questions typed in that we can get to. Jerry, do you want to? How much more of the information on your website do you want to get through, or should we just go all questions at this point?
No, I just wanted to mention very briefly that we've got a page on 501c7. The C7 status essentially is your typical, they grew out of the country club type of situation, although it could be broadly applied to any sports or athletic activity, but it's totally membership focused. And so really there what you're saying is that on the one hand, the organization must only be directed to the members, which is why you cannot do substantial public donations or fundraising or derive any revenues from the public, because it's limited to the members. But at the same time, you still have this general nonprofit notion that the members cannot profit individually from the organization, and the basic rationale the IRS is using here is, well, gosh, if all the money is coming from the members, then we really don't care if all the money goes back to the members, because it's just their money. And it's only a problem if they get additional money coming from the public that's being added to the money coming from the members that now the members are going to enjoy the personal benefit of. And that's why these public events create the problem for a 501c7, because the whole theory of a social club or a recreation club is that, yeah, the members benefit, but it's all their money to begin with. And so we're going to limit them in a C7 status to solely membership dues and membership fees, and that way it's only the money they put in that they get out. You can't really call that profiting. And so that's the whole theory of a 501c7, and that's why the revenue streams, you know, you can't go out and sell stuff, you can't go out and raise sponsorships, you can't go out and get donations, because the whole theory is the only money that's going to flow to this organization is the money that the members put in and take out and keep circulating around and around and around and around. So that's basically what's going on in a 501c7 status, and their interaction with the public is much, much more limited. For the most part, you cannot even allow the public to use the facilities, and so that's why you have to be, you know, vouched by a member to get in, and you only get in on, you know, up to 3 times, and you have to pay a fee, and then you either join or you don't come back. And that's a typical 501c7 type of club mentality, which is an entirely different animal. But as I said, because it has so many disadvantages economically, the IRS basically never denies the status. They always grant it. It's very easy to get. because who wants it? Well, obviously some people do, but they have to understand the limitations that that's what comes with that exemption. And if all you want to do is avoid having to pay taxes on membership dues and membership fees, that's a very easy thing to obtain. Then 501c7 is your vehicle. But you can't do much outside that, and your whole public exposure, you have to think of it as a private club more than as a public entity. If you want to have any interaction with the public, you've got to be forced into the 501c3 route for the most part. But if you have any other questions, there's some other materials here on the page dealing with 501c7 status that you can look at. But I'd be happy to take any other questions that people might have.
Okay, I have a few lined up, sent in. John Day asks if he has a small club that has less than $5,000 revenue per year, why bother to become a nonprofit? And I think by that, probably meaning why bother to become incorporated, which we could revisit quickly, and why bother to become tax exempt?
Well, gosh, yeah. I mean, the cost of just getting into the game is going to be, half of that initially, and then you're going to have accounting fees. You're not going to have legal fees every year, but you're going to have accounting fees every year to maintain that status. And so, for $5,000, I wouldn't do it either, probably.
You wouldn't bother incorporating or?
Not for that small of an enterprise, no.
Okay. So the next question is the matter of bike clubs that had a recognition letter years ago, but did not realize that they needed to continue to file, or that 3 years ago there was a change made that then required them to file. We've got an organization, I guess, that has not filed their taxes for 3 years, and is probably on that list of organizations that the IRS has yanked the statuses of. What can you tell us about what to do if you're in that position?
Reapply.
Okay, I believe there's an expedited reapplication process. I've seen something about that.
Well,
for small organizations.
There may be. See, we don't deal with the 990 reporting end. We don't handle, as a law firm, the accounting side, and so we don't ever prepare 990s for our clients. We leave that for the accountants to take care of. And so, I've had some people who have gone back to their accountants and tried to essentially file the missing returns and try to get back in with the IRS, and I guess they've had some limited success with that. I don't know any that have actually had to reapply at this point, but if that's something that you want to try, I would suggest going through an accountant to do that. If that doesn't work, then you'll have to reapply from scratch, and then you better get somebody who's, competent in the nonprofit tax-exempt area to handle that for you.
Okay, a couple of quick C7 questions. What income streams are available to C7 organizations besides dues?
Membership fees, pay to participate type of fees.
From members?
Yes.
Okay.
And guests. I mean, as I said, a typical, for a social club or rec club to allow guests to come in up to 3 times that are, sponsored or vouched by a member, but they have to pay to participate to come in. That's fee income. That's not membership income. But essentially, those are the 2 types of revenues. And in a C7, another distinction is, and this goes down to the page here, that passive income is taxable to a C7, which is not taxable generally to a C3. In other words, if you've got a savings account that's generating interest, I know that banks pay ridiculously low interest these days, but just, you know, for general discussion on any type of passive income, whether it's royalties, dividends, interest, or whatever, for a charitable organization, that stuff is tax exempt. In a 501c7, that type of income is taxable. It doesn't matter how big or small it is. If you've got $5 of interest income in a year, it's taxable. So yeah, you're very limited in terms of your non-taxable revenue streams, essentially to membership dues and fees to participate. That's it.
Okay, let's see. I'm just looking through. I mean, George Connolly of the Morris County, Morris area freewheelers. We heard from Jay before. George typed me a question, but his hand is up. George, are you in a position to ask that question out loud? George, got a mic? No, but let me go ahead. I can read George's question, which I think is kind of the key question a lot of people are thinking about tonight, where we're kind of unresolved. How can a bicycle club that does not qualify for 501c3 status run an event that charges fees to outsiders, where the revenue will exceed the 35% limit? Because this is the position a lot of our clubs are in.
Well, you can set up a second organization and you can have them running in tandem. You just don't want to commingle the two organizations, and you really have to identify, you know, what the purpose of the C3 organization is going to be, and make sure everything fits correctly. And nobody says you can't have two organizations at the same time, but that's the only way you're going to be able to do it.
Did you have a chance? I sent you kind of late today that Far Hills ruling that I had gotten from Mr. Connolly. I don't know if you had a chance to look at that, and
I did.
And if you could summarize that for people and tell how it fits in with this discussion.
Let's see if I can find it here. I think it's a private letter ruling. Let me bring it up. Oh, no, it's okay. It's actually a revenue ruling, but it's an old one from 1968. And let's see here. Yeah, the key purpose here, or the key language here, basically you had a steeplechase, which is a equestrian type of club that held an annual event in which non-members participate, and they asked for the IRS to basically pass on the question of whether the revenue generated from this event would be inconsistent and therefore jeopardize their 501c7 status. And the IRS concluded that it would not, but you know, the language, but that is fact that, okay, two things. One is that the ruling is based on the facts of the particular case, but the language that's going to carry over and apply in all cases is this language that the public event has to be incidental in comparison with the overall revenues and purposes of the organization. Typically, another word that's used is insubstantial, incidental or insubstantial. These are nice weasel words the IRS uses because that way they don't have to define any bright line numerical tests. I can just tell you that generally speaking, anything under 10% of gross revenues for a year is going to generally be regarded as incidental or insubstantial. Anything over 20% generally is going to be viewed as substantial. So when we say substantial, we're not talking majority. We're not talking 50% and up. We're talking 20% and up. Anything between 10 and 20% is arguable depending on the facts and how well you posture and make your case. It depends on what the facts are that are relevant. So, you know, the IRS always has this language. It sounds absolute. Both 501c3 and 501c7 have similar languages that you must be operated and organized exclusively for X or Y purpose. By case analysis and court ruling, that has long been understood to mean actually not exclusively but primarily, and so that small encroachments that are incidental and insubstantial have always been allowed. The IRS has never defined in bright line terms when you cross the line beyond incidental, beyond insubstantial, but those are the general rules of thumb. You're safe below 10%, you're generally at risk over 20, and you're somewhere in the middle between the two. Make your case, hold your breath. You know, the 35% instance is probably, you know, a very clear case of being beyond 20%, and so it was probably a pretty slam dunk instance for the IRS to look at. But, you know, whenever you have these kinds of situations, divide and conquer, form two organizations, keep them separate, and have them run in tandem, and that's how you solve the problem.
And what status should the second organization have? A C3, or are there other options?
Well, again, you have to clearly define what its purpose is. The purpose you have to define, first of all, is this purely a foundation which is going to make grants, in which case the purpose of the organization is essentially whatever use of the money the grant recipients are going to make? Or will this organization have its own operations, in which case that will be the core purpose of the organization? You may make grants incidentally in addition to that, but it's your own operations that are going to control what you do. And how you raise the money is going to bear on that question in a variety of ways. You're not going to ever simply whitewash an income producing activity simply because you take the profits from it and pour it into an exempt purpose. The IRS is always going to be interested in the manner in which the funds themselves are raised and whether that is actually an exempt purpose. And then they will also look at the way that the money is spent and make sure that those are consistent. So, you know, you have to tell a story. the IRS application for tax exemption provides a one-page narrative. It's essentially a page with a fill-in-the-blank here to tell us what it is you're doing and why you're doing it. And a lot of people don't understand that this is the opportunity to tell a story and to paint a picture, however you want to phrase it, where you want to make a good case in, 3-4 paragraphs of why you should be exempt. You got to sell yourself. You got to sell the concept, and you got to put it together in a way that makes sense, both on the income and the expenditure side, and that it looks consistent. And if you can put that together for a C3, then that's what you go with. Obviously, if you can only put it together for a C4, then you apply for C4. But the point is, you have to be able to put together this story in a way that makes sense, so that when the application arrives on the desk of some IRS employee, that they're going to buy into this concept and say, oh yeah, this looks like a C3. They're going to use, they're just people like anybody else. They're going to use the smell test. Does it smell like a C3? Does it look like a C3? Do they do things the way most C3s do them? Do they interact with other C3s? Do they play the C3 game? Or do they hold themselves out as a charity? And it's all about selling the story and the vision. You just have to craft it.
Great. I think that's a good wrap-up. I have a lot more questions. I do want to wrap things up fairly quickly so we don't go over the 9:30 time barrier. I'll try to answer some of the questions that we didn't get to tonight. Jerry, if you've got time in the next few days, maybe if you wouldn't mind looking at some of them and giving me guidance so that I can provide the answers to everybody that was here tonight as best as we can to some of these questions. I'll just throw in a couple more things from our list of questions. Ron Pewitt notes that the June 13th exempt organization update, which I think I sent around to club representatives, that there is a reduced filing fee of $100 for those that failed to file their returns. So you may want to look into that. I can re-forward that notice or attach it in the club corner along with the recording and materials from tonight's presentation. Following up on one of the previous questions in terms of organizations that may have had their status revoked, in question about if a club is unwittingly operating as a 501c3 for a status that they no longer have. It was revoked without the awareness of the officers, perhaps prior to the most recent round, but unwittingly operating under the false pretense of being a 501c3. What are the legal risks of operating that way? Are there tax penalties at risk for club officers, if that makes sense?
Well, 501c3 status, unlike C7 status, the IRS does have applications for all of the various statuses, but the reality is that you can claim C7 status without applying for it. That is not true for C3. You must have the letter, you must apply, you must get the pre-approval, or you haven't got it. And so if you lose it, you cannot claim it by default. And so you are then in a position where you have no exempt status to fall back on, and what you then have is a taxable nonprofit. So if you're in a situation where you once had C3 status and it's been taken away, you didn't know, you didn't do anything about it, you didn't file, and all of a sudden now you're in a position where you're finding yourself, oh gosh, we thought we were exempt and now we realize we're not. What does that mean? That means you file an 1120 like a taxable corporation. You file a tax return like a business. That's what it means. You might be nonprofit at the state level. It's not going to change your incorporation papers, your articles of incorporation. Nothing with the state is going to change. You're simply going to change your tax status for filing with the IRS. And so you will not file the 990, you will file the 1120. Now you may or may not have anything that's actually taxable. Having said that, I mean, if your revenues don't exceed expenses or you've got deductions that carry over from prior years to offset any current profits, you may not end up owing any taxes due. So you may not have any penalties apply from that standpoint, but of course, to the extent that you fail to file a tax return at all when you were under the obligation to file one, the IRS is going to expect you to file that. But again, those penalties are always based on a percentage of the tax owed. And so if you owe no taxes, the penalties will be zero. But if you owe taxes, the penalties will multiply fairly quickly. So it's not the kind of thing where you just take a lazy attitude and say, well, you know, we'll figure it out later. You better figure it out now and make sure that you're filing correctly to minimize any exposure.
Okay, great. Thank you so much, Jerry Thompson from Thompson & Thompson. I will make sure your website and these resources are linked from the Club Corner, where we will have the recording tomorrow. I am sorry to everyone whose questions I did not get to. We ended up with a pile of questions. And again, I will try to work with Mr. Thompson to get these questions answered and those answers distributed to people within about a week or so. We'll do it as quickly as we can. Jerry, thank you so much for helping us out tonight. You know, I kind of thought that tonight this would be the high ebb of what I needed to find out about tax-exempt status, and I could start knowing less about it starting tomorrow. But from the questions and concerns that people had, it seems like I do need to keep learning more to help keep our clubs in the loop and in the right. But I really appreciate you helping me get there, Jerry. Thank you for everyone being here. I hope it was useful. I'll use this to get more information on these topics out to our clubs. Thanks a lot.